What's going on, YouTube? It's your boy Char Slay here, and today what I'm going to be breaking down to you guys is my current Forex trading strategy that I currently am banging out these trades with. So I want to go ahead and break these things down, break the steps that I take, my psychology behind it in grave detail. Let's get into it. All right, one, I want to go ahead and break down in quick notice here. Nice disclaimer. I am not a financial advisor, so I am not teaching or not advising you on taking specific trades. I'm just going in the past, breaking down some of the trades that I have taken or would have taken. Right now, I'm currently pausing Forex trading. I've gotten more into options lately. So if you guys want to bring some videos revolving around options, I'm definitely down for that as well. Let me know in the description box. But right now, I've actually haven't been trading Forex in about 3 weeks, but I have definitely been back testing this entire 3 weeks. So I have not just been here chilling like I gave up. I have not given up. I'm definitely going to be starting trading in the next week or two. I just want to make sure that my strategy right now is proven and solid, because back testing is very, very key. So let's go ahead and get right into the charts. I want to go ahead and break these things down for you guys. So today, right now, hopefully you guys can see me in the corner. Right now I'm about to break down the strategy. So right now this is USD JPY, right? USD JPY is one of the trades that I was back testing not a couple weeks ago, but I was back testing this entire couple weeks that I was gone. So what I like to do, right, if we go on the weekly first, I'm a big pattern recognition guy. So what I like to see here, or what you do see here, is a nice push up, a nice correction, a nice weekly correction, and then so what I'm looking for next is just a nice push up to the upside eventually. Okay, this might not happen for a while, right? Price could easily push back down here and then push back up, right? Going off the price action that I am seeing right now. So knowing that, even though I see a buy in the future, right now let's go to the daily and see what price action that's giving us right now. So on the daily, I do see price moving up, but what I do see is a nice impulse and a correction to go to the downside. All right, so that's what I currently see. All right, so but what I usually do is also apply fibs. Fibonacci is like a go-to of mine. What I like to do is draw from the high to the low, right? And you guys let me know in the comments below if you want me to come out with the Fibonacci video. I might drop a video like that. I want to see if you guys want me to drop it first, but this is how I usually draw Fibonacci. So what I like to watch for is, you know, the 50 and 61.8, and obviously the 78.6. These are the levels that I pay attention to in regards to taking trades. Now, my high probability trades is definitely my 50 and 61.8 zone right here. The 78.6, I'm just using it as a guide, but I will take a trade off of. Okay, so 78.6, the greatest part about the 78.6 is that I have a higher risk to reward, but it is less probable of that actually happening, depending on what's going on. So, but I know the 50 and 61.8, as you can see, just off these levels, you have an easy drop down here, easy drop down here, and then as you can see at this point, it broke out and then drop back down into the 50, and now we're kind of consolidating, seeing what's going to happen. Is it going to come back up here, or is price going to completely drop to the downside? We don't really know at this moment. So this is what I like to identify. So I'm going to pretty much talk about two different areas on USD JPY. I'm going to be talking about this area, and I'm going to be talking about this area, right? Because I want you guys to literally understand what I'm looking for. So the first step of how exactly I trade is I look for an impulse and a correction. All right, and we already broke that down. Second thing is a pattern. Third thing is I'm waiting for price to retrace into these specific zones. All right, the 50 to 61.8 and the 78.6. These are the specific zones that I'm looking for. So first we're going to break down the 61.8 level. All right, so I'm going to look at price here, and we're still on the daily. Okay, now as soon as I get a daily pullback, right? As soon as I get a daily or 4-hour pullback, whatever pullback it is, but we're just going to use this as an example for the daily. I like to take my trades off the 4-hour and the 1 hour. All right, mainly the 4-hour. Why? Because 4-hour has a higher confirmation, right? It's a higher confirmation. So what I like to do now, we're on the 4 hour, I just wait for candlestick formations. Very, very simple. So what I'm looking for, as we can see here, we got a nice pullback, a nice retracement, and price is starting to pull back into the 61.8 level, right? And now that we got that specific touch on that level, now I'm looking for a candlestick to get me inside the trade. So this engulfing candlestick would have been everything I needed to get into this sell. Okay, would have been everything I needed to get into this sell. So I would have had I'm gonna go with the 40 pip stop loss, right? I would have gone with the 40 pip stop loss, and then what I like to do is go all the way down to my 61.8 as my final TP. Okay, so as a final TP, that gives me a 9-to-1, closer to the 10-to-1 risk to reward. Okay, so that is my go-to, right? And from there, I just take my trade, and we're gonna go on the 4 hour. I just wait until it hits certain levels. Okay, so for me, TP1, right, is around this area here. Okay, around this area here. Actually, I'll draw a box in this area. TP1 would actually be in this area here. This would have been my TP1. Okay, and then TP2 would have been in this zone at this level here, around the 236 would have been my TP2. Okay, and then from there I would have kept going. Now it all depends, these Fibonacci levels that you see here also play as TP levels, but it all depends on how exactly, or how far the impulse and how far the correction. Okay, so this would have been my entry here, and as soon as price hits TP1, I'm moving my stop to break even. So boom, price hit TP1, right? But I want you to understand, just because price hits TP1, you still have to use it as a discretion. Okay, price didn't close here at TP1, price wicked here at TP1, right? And that means that price can easily go back to the upside because you have a form of rejection. Okay, that's what that means. But if we go here and then just see how price moves at TP1, so we have a nice level here. Price is at TP1, right? And that might not be, if we, let me zoom out and make sure, right? I think that might be close to a 1-to-1, right? So right now, yeah, that's about a 1-to-1. That's about really about a 6 or so to 1, right? This is what I mean by discretion. You might be pulling it back at at break even at this point, right? And that's completely fine. Honestly, I would have probably moved it at break even. To give you complete honesty, I would have moved it at break even, and then from there I would just wait, right? And I would have got tagged out, and that's fine. Now, if you're one of those people who are a little bit more conservative, right, and wanted to wait a little bit longer, that's fine. Price is still in this area. You're still, kind of bouncing in this area, and you're just waiting for a nice drop, right? Now, for me, I would have looked to enter right after this correction here, right? You have a nice flag here, nice bearish flag right after a nice impulse. This would have been a nice entry, right? I would have taken another entry at this point, would have had a sell stop here, stop losses above this high at around 50 pips. All right, and then obviously TP1 would be here, TP2 the trend line, and then so forth, right? And then I would have just waited for price to trigger me in, right? And boom, I got triggered in, right? So if you would have, let's say you didn't move your stop to break even on the first trade, boom, this is the time where you would kind of move your stop to break even, or you would wait for these lows, right, to be broken first before moving it to break even. It's really a personal decision. This is what I mean by discretion. Okay, this is what I mean by discretion. So now you're just waiting for price to really get into that level. Boom, you officially moved your stop to break even. And now for sure on this trade, even though we wicked, it was a nice long wick, so I'm moving my stop to break even as well, right? Very, very simple. I'm showing you guys how exactly I trade and how exactly I manage my trade and execute my plan, right? So this is exactly what I would do, right? And boom, we're just waiting for price to really take off, right? But we got tagged in at break even. This is realistic of how trading is, okay? This is exactly how it is. You'll get a lot of break evens, maybe a couple losses, and then you have a winning streak. A lot of break evens, couple losses, and then you have a winning streak. It's not in that exact sequence. You'll never really know how it goes in the sequence of your wins and losses, but this is how it goes. This is how I take my trades, right? And of course, And this flag, I just know off of, experience, but I would have also drawn my fib here as well, right? I would have drawn my fib here. And as you can see, price came to the 50 and 61.8 level and would have really gotten me into the trade. And you have, because I have two ways of entering, right? I could get into the trade off this bearish engulfing right here, this major bearish engulfing, right? That would have triggered me into the trade. Obviously I would have went off this one because I wouldn't have known really that this would have pulled back and came back down. I wouldn't have really drawn my fibs until I saw this correction. Until I saw this correction actually forming. So boom, I would have had the engulfing here. I would have taken this trade probably around a 15-20 pip stop, and we would have had a nice trade, right? That's another way of actually entering that I personally know that I would enter off of. But off just experience and just keeping things simple, I like to also put sell stops here as well as a way of just, adapting. My original way was to draw fibs at that correction, but I've seen after I get to a daily 50 to 61.8 level, what I like to do after at that level and we get a nice impulse in the correction, I like to just set a sell stop at that level because I like to just let price do its thing, and it keeps it simple for me instead of me always having to throw out fibs. So what I like to do is keep my Fibonacci retracement tool always on the higher time frames and not necessarily a lot, at least not a lot. I'll show you an example soon of how I would use it on the lower time frames, but I like to usually use it on the higher time frames and then go ahead and break it down and just take sell stops on the lower time frames. But like I said, this is exactly how I would have taken this trade. This would have been a nice trade. Here you could have also drawn another fib. This is how fibs can really be, fibs on fibs on fibs is what they call it, can really be amazing. An amazing tool. 50%, nice railroad, nice pin bar, nice engulfing. Whichever one you really want to take first, you could have taken this trade, and then it would have went down and then pulled back and then went back up. Now, when price comes back up here, right? This is how I personally look at it. When price comes back to this level again, I'm looking to take the exact same trade again. I'm looking for candlesticks that'll trigger me into the trade. Right, it's very, very simple, right? So when price comes at any point in time, I'm looking for specific ways of getting into trades, right? I'm looking for price to come to the highest point, right? Or in this case, this is the highest point, right? Because when it came back to that high, I would have had this resistance line here. So this would have been my highest point. Price is very corrective, so I would not have had an entry there. Right, I just wouldn't have had that. So this is just how exactly I would enter into a trade. Now let's break down the second trade that I would have entered into. I'm going to go on to the daily time frame, right, and then I'm going to let this play out so we can get to that point. Going too fast, right? So this is what I would have did, right? Let's say here, boom. This is where I started seeing the correction, right? I started to see a nice impulse. I saw a nice middle section here, and then I saw an impulse back to the upside, right? This is exactly what I saw. So then a nice, very, very nice, using confirmations, right? Very, very nice daily bearish pin bar here, right? And then I would have went into the 4 hour to try to get that entry. Right, so you see on the 4 hour we got a nice engulfing, very clean engulfing. So I would have definitely entered off this engulfing, right? Probably had around a 45-50 pip stop, right? We had a 50 pip stop, and then of course, always final TP is at 61.8. Okay, 61.8. All right, I don't even know why that negative one is down there. I wouldn't have used that. Let's take this off. But 61.8 would have been my final TP. Okay, so that's about 443 pips, honestly, right? 443 pips. And this is exactly how I would have taken my trade. All I do is draw my fibs, wait for a pattern, wait for price to come to that level, and look for a candlestick, and I execute. That's literally all it takes. Very, very simple, right? You could have also went on the 1 hour, and I know just off the 1 hour that, off of, where's that trend line? Boom. Off of just having experience, I knew this was a correction, right? So I knew that. You could have also taken, candlesticks on the 1 hour if you wanted to. It's your personal choice, right? It's your personal choice. It's really up to you. If you want to take trades on the 15-minute, you personally can as well. This would have been a nice 1 hour retracement right here. You can also take, wait for impulses and corrections, right? You would have had a nice entry here, right? And it's personally up to you. There's no right or wrong way of taking a trade. But what I do know, for me, for consistency purposes, me personally, I'm a swing trader. I like holding trades a little bit longer. I like to wait for price to come to certain areas of interest, areas of value, and I like to look for 4-hour candlesticks. And from there, it gives me the bag, right? To be honest, and this actually played out to my back testing. I would not have been taken out at break even. It would have been close, but price would have came back down, right? And then boom, now I'm taking out at break even. Honestly, I would have moved my stop probably above this high, right? So I would have been taking out a little bit at over break even. And then obviously this price action came all the way back up to the top, right? So knowing that this came all the way back up to the top, guess what I'm doing? I'm looking for another entry again, right? I'm looking for it again. So now I'm seeing price action. I'm looking for price action. Boom. I see an engulfing area, an engulfing candlestick at a very nice area, okay? At an area of interest. Okay, so at that point, I would have just had a 25 pip stop loss, and boom, you know my TP all the way down there, but I'm gonna draw it right here, and then we would have just played it out. Boom, nice. And I would have definitely moved to that break even at that point. Nice large candlestick, right? I would have moved it here, right? Move something here, right? And it's just very simple. You see what I'm saying? Like, my trading is very simple. If you wanted to get an extra entry here, I know that there was a flag here. You could definitely get another entry at that point. But me personally, I like to wait for 61.8 levels. And then boom, like this would have been a very nice trade to play out. Like I said, I would have taken this trade on my trade account, but I want to start back testing and start really honing down my skill a little bit more. But this is literally how I would take a trade, right? So how I would take a trade like this. So when I start seeing large corrections like this is where I will draw a intraday fib, right? An intraday fib. So price came to this point, came down and gave a nice engulfing. I would have entered off that engulfing, right? Entered off that engulfing. Stop loss at the 61.8 level. Boom. TP to 61.8, but knowing that this could really come down to the daily 61.8, I would have drawn it all the way down at the daily, right? So that's not a problem. But I would have literally looked at that. Price came back up here again, right? Gave you another entry at the top. You have a nice pin bar here. Gave you another entry, so you could have had 2 entries at the top, and we'll see when the market opens on how exactly you could enter into that trade, right? If we get tagged out, then we know price is just gonna head over to these highs, right? And then at that point, we delete this fib and go based off this fib and based off this trend line as confirmation. So family, this is all I do. There's nothing really complicated. I don't, make things super simple. I mean, super complicated. I make things extremely simple. And I want to make sure that you guys are getting a lot of value. Make sure you're understanding that I am also evolving as you guys are evolving, right? From the beginning, I traded, Ichimoku. Next, I traded Ichimoku and fibs. So I'm really coming back to my my original roots when it comes to fibs, because I really love fibs. Then I went down to MACD and EMAs, then trade naked, and then from there I really just took off and trade naked. And I love trading naked, but I want to implement fibs. I really have been wanting to use fibs, and I've been trying to back off. Something's really just been telling me use fibs. And so I've just been back testing, and there's nothing wrong with back testing. All right, and just not trading and not willing to use your money, because at the end of the day, your capital is first. Preserve your capital first. There's no reason for me to just annoyingly waste my money if I don't have to. So family, this is everything that you guys know about my current strategy. This is how I've been trading. This is how I've actually in back testing I've been winning over 60-70%, because fibs are just that consistent. So family, I appreciate you guys, and I will see you guys in the next video. Peace out.